Welcome back to my YouTube channel, guys. Today I'll be teaching you a very important topic when it comes to trading and analyzing the financial market as a whole. I believe every one of you have heard about the term liquidity, though not everyone is familiar with the term fair value, which is a basic fundamental to technical analysis. I believe every trader should understand and how you can apply this to your analysis to achieve extreme accuracy in terms of predicting the market directions and trend. Let's get to it. First of all, what's fair value? Right. So, speaking about fair value, okay. Now I already have some notes here to actually keep it simple. So I'll explain more on the technical aspect here, but it's very important and key to actually understand this thing for what it really is. Now, first of all, what's fair value? Okay, now this refers to the theoretical price at which an asset should be trading based on fundamental factors such as supply and demand, earnings, growth prospects, interest rates, and other relevant indicators. All right. Now, this is to say that fair value now, yeah, basically there needs to be an agreement, all right, between buyers and sellers. Okay, there's an agreement between buyers and sellers. Now this is telling you now that for buyers and sellers to be in a move, okay, for buyers and sellers to be in a move, price has agreed to fair value. That's why you see sometimes the market keeps trending towards one direction, market is trending one direction, it's maintaining it here. You call it break of structures. We're seeing market is breaking structure to the upside, okay, it's maintaining higher prices, okay. Market is basically offering fair value. I'll talk more on this below. Now, what is liquidity? Yeah, I believe everyone is familiar with liquidity, most especially if you're on X, and because you already know. So smart money guys, ICT and all that, yeah, feel like everywhere on Twitter, basically on Instagram, anywhere you go, WhatsApp, your contact list, everybody's trading smart money, liquidity. All right. So that, but most people now tend to just understand this liquidity for technical liquidity, like um liquidity they feel just all about, like, let's say equal highs, all right, equal highs or equal lows, or let's say there's a build up, something like this, says liquidity and stuff. Yeah, it's correct, okay, but there is something that you should actually understand in this liquidity. All right, now what is liquidity, for what liquidity truly is? All right, not the technical aspect. Now let's not look at it from this perspective that all right, um we already have patterns we are following, and now we must stick to that pattern in terms of analyzing our charts. We want to actually understand what this thing is, so we don't just trade the patterns, but then again we actually tend to understand what price is telling us. All right, tend to understand what price is telling us. Okay, so basically now, liquidity refers to the ease which an asset can be bought or sold in the market without significantly affecting its price. All right. So what's that telling you now? That's telling you now, without liquidity, price is not going to move. Without liquidity, market is not going to what? Is not going to move. Okay. So basically, we need liquidity. And what liquidity? Basically, every price turning point is liquidity in market. All right, every price turning point is liquidity. Let's say this is a uptrending market, for example. Now fine, now we are actually creating series of higher highs, higher lows, higher highs, higher lows. Basically every price turning point is liquidity. Any point, even the intermediate structure, right, that is to say, inside this, let's say this whole trend now, yeah, in the lower time frames we are going to be seeing something like this. Inside there are liquidity. All right, so without market seeking liquidity, market does not move. If there is no liquidity, market does not move. The time you see market makes this clean break of structures to the upside, they have to come and retest here. It is because there was liquidity sitting around here. There's something market came to actually fish out here before it can actually move. Then sometimes you see market actually push lower into that range. All right. Then makes it way to the upside. All right. So that's the basic stuff you need to understand in liquidity. All right. So highly liquid assets can be traded quickly with minimal impact on their price. Okay. While illiquid assets can take longer to buy or sell and can experience significant price fluctuations when traded. All right, so we're going to focus more on liquid assets because that's what this video is focused on. So it won't be long and boring. Now, examples of liquid assets are what blue chip stocks. We have government bonds. We have major currency pairs like GBP USD, USD JPY, Euro USD, um, just name it. All right, then we have exchange traded funds, which are ETFs. All right, so those are liquid assets. And now if you tend to, let's say this current chart I'm looking at here now is GBP now, you can clearly see now that this is an obvious liquid asset. Why? Because you can clearly see the free flow of market to the downside. You can clearly see the free flow of market to the upside. That's to say, when market has actually picked a direction, it has what picked a direction. All right, because it's like it's a liquid asset. All right, so just look at it like you pour it on the floor. It obviously to spill. All right, like you just be like spreading. Okay, so now what is this liquidity technical wise? All right, because that's a fun aspect of it. At least now we can actually fully define and understand what this fair value is and what is liquidity. All right, so now let's look at it from this perspective. Okay, for market to move from point A to B, all right, for market to move from point A to B, market needs what? Liquidity, right? So if market needs liquidity to move from point A to B, then what happens if market is pulling back? Okay, what happens if market is pulling back? Market is still what? Seeking liquidity one way or the other. All right, so now let's consider this from a trend. Okay, from a trending perspective, now we have a low, we have a high, we have a higher low, we have a higher high, we have a higher low, we have a higher high. Now there's a term I want to introduce you guys to. Now pay attention. If market does not offer, if market does not offer fair value, it is going to seek liquidity. All right, first off, what is fair value? Now I'm going to break this down. Now fair value, when we see price, for market to be fair, it means that there needs to be buyers and sellers agreed in that move. All right, that is what actually causes that expansion. Because if they were just buyers present and sellers present, market is basically just going to be stuck here. There needs to be that agreement between buyers and sellers. The market makes its way to the upside. All right, so what is this telling you now? For market to actually break away from this structural point here, okay, for market to break away from this high, it is telling us now that fair value has been what? Offered. Okay, it is telling us now that fair value has been offered. And now if fair value has been offered, this up price that you are seeing here now is the next focus that you should focus on. Why? Because this particular price point here, we are seeing only buyers. Now, what needs to make this actually a fair fair value now is that now we see that there's only buyers active here. Now we need to see both buyers and sellers present. Now, because this particular one now has already played out. Now, this is a fair range, all right. This is a fair value range, okay, in the sense that anytime price actually returns back into this range, we'll be expecting a buy opportunity as well. Okay, that is say market should be offering fair value. That's what's called when market is offering fair value. Please be taking notes. That's what say market is offering fair value. When market returns back into the range, all right, and the previous highest price point of that range, which is this high, okay, and tries to push, because then market, like if you even see from basic market structure, when we learn from basic baby pips and all that, when they are doing their market structure, they are being keen, like they always focus on just this particular types of structure, just this particular type of structure. Why? Because that is truly how price was supposed to move. All right, that's how price was supposed to move. Okay, so what we are now going to see here is that now we are seeing now that there's only buyers offer now. So for this to create another fair value range, they need to be both buyers and sellers who are happy to transact at that particular price. In this case now, this is GBPUSD for example. Let's say sub around 1.7. All right, this is the price scale, and from 1.7 to 1.63. All right, only buyers offered. Now we need to see sellers offered here. All right. Now sellers offer here.
going to test what previous highest price point. Okay, so if sellers are testing the previous highest price point, now for seller, based on this is a fair value range, that is saying now there's been buyers active here, there is sellers active here. That's telling us that there is demand in this price point. Okay, so since there is demand in this price point, market tends to actually move away from here. Why? Because we're basically eating think about it. Okay, sellers actually coming in now in the market. All right, so how far can sellers push price to? Obviously this is the demand. This whole point is a demand. All right, so now that's what we call market is now what offering fair value. Okay, market is offering fair value. So when market starts offering fair value and now market now breaks the high like this, all right, automatically now we've already offered fair value again here. Okay, so now the next question is now what is market going to do now? So is market still offering fair value? Of course. Okay, but we have to see the signs here first. Okay, because right now we know that all these parts has already been traded on. Now the only part that has not been traded on is where is this region here, this shaded region, this particular point, it has not been traded on. Okay, so since it has not been traded on, there's bias here. And now what do you want to see to make this actually a balance point? All right, to make it actually like make more sense, we want to see both buyers and sellers come on agreement, then we choose the next fair price. Okay, then we choose the next fair price. So automatically now this particular price point now has been changed to what it has offered fair value. So the moment, pay attention, the moment price fails to offer fair value, what does price start doing? Price starts seeking liquidity. And what is this liquidity? Liquidity is basically every price turning point you are seeing. All right, because you are going to be seeing structural points, gaps, anything you can think of. Everything basically is liquidity. Okay, everything basically is liquidity. All right, I'll talk more on that on my upcoming videos. Okay, but anything basically is liquidity. That is to say, if market is not retesting at this highs to go to the upside, market tends to actually push lower. Now anything you call your liquidity, if you are trading fair value gaps, if you are trading other blocks, and you are seeing okay, let's say there was a build up around that level like this, all right, the market just spiked up like this, then um if market is coming back down, okay, obviously you wanting market to actually clear out this point as per liquidity, all right, to move to the upside. So you be expecting something like that to happen. All right, anything basically liquidity, even this low is liquidity. All right, it now depends on what the current market team is telling you as to which liquidity does it want to clear. All right, it now depends on what it's telling you. Okay, so right now what I'm basically saying is that if the market it is not offering fair value, it is seeking liquidity. That's a two ways market move. If it is not offering fair value, okay, if it is not offering fair value, it is seeking liquidity to continue going back up. Remember on my previous video, if we are seeing like market is creating series of higher highs and higher lows, higher and higher lows, basically we're accepting higher prices. Yeah, since we're accepting higher prices, what's that telling you? That's telling us now this asset is valued to the upside automatically. Yeah, now this lower price point I will call was structural point. Now look at it from this perspective again. If this region now is price offered fair value here, okay, price offers fair value here, price offers fair value here, all right, price offers fair value here, okay, now and market now is failing to offer fair value. What's the next thing? Let's say you were trying to buy around this region here and it's not working out. So what's the next thing you do? Okay, you start thinking, okay, fine, that means market is seeking liquidity. Okay, so that way you tend to be balanced psychologically, number one, because you actually understand what the market is trying to do at every price point. And this is same for the bearish market as well. Okay, so it's either the market is offering fair value or it is seeking liquidity. So if it is not offering fair value, it's seeking liquidity. That way you tend to join trends. Let's say you wake up and let's say you wake up in the morning now and market has like expanded. Then you saw that, let's say before market expanded like that, it broke this structure like this. All right, and the expanding now, let's say London spike or whatever. Okay, now, these markets didn't test this high. This is not yet what? It's not yet a fair. This is like this point. Fair value got offered here, but this particular price point here. This is why you see market pulls back. This particular rally that market recently just did, market tends to correct it in the sense that we need to see buyers active and we need to see sellers active at that region. All right. So we need to see buyers active and sellers active. Okay, based on we understand the fact that previously market offered fair value, right? So basically, what's market going to do now? We're going to expect the market to offer fair value, all right. And if it's not offering fair value, then we'll start expecting market to start was seeking liquidity. All right. So now I would explain this right now on the live chat. Okay. So now let's look at this is GBPUSD 4 hours time frame. All right, this GPU is on the 4 hours time frame. Okay, now let me start from this particular region here. Okay, from this high now. Okay, from this high now, we can see clearly that what happened here. All right, market basically broke the structure to the downside. All right, now since market broke the structure to the downside, now what are you going to actually look out for now? We can see that this particular price point now we had there were buyers active, there were sellers active. All right, so they sponsored that move to break the structure, which was fine. All right, so the structure got broken. All right, structure got broken. Now market made a low here. All right, now since market made this low, all right, and market is now creating this high, and now this high was sufficient enough to break this low. All right, so since that low is broken, you are going to follow the market theme. And what I usually tend to do, I like to draw them from the bodies. All right, to give more accuracy and precision. All right, so you drawing them from the bodies now like this, for example. All right, just like so. All right, now basically what are you going to be expecting now? Since market has broken the structure now, are you going to be panic selling around any of all these points? Of course not. All right, so but first things first, you are actually expecting market to come and what offer fair value. But here you are clearly seeing now that market is not offering fair value. Then what do you see market is coming to do? Market is basically seeking liquidity, all right, to turn. All right, then let's say you trade smart money, you trade support and resistance, any model, you try your entry criteria around these levels, it's actually going to work. All right, let's say okay, fine, look here now, you see that market has actually broken this structure here again to the downside. All right, market broke the structure there to the downside. Let me get rid of some markers here. Okay, so market broke this structure to the downside, all right, which is nice. Okay, now we've seen that break again. Now what are we going to do? We're going to mark this out like just like this. Okay, just like so. You are going to cover the whole range. All right, because now we are seeing that there were buyers offered, there were sellers offered. Now what I see here now, market is failing to offer what fair value. Then what this market is doing, market is seeking liquidity. Then up we go, and this will be your target point. Your next structural points are always your target point. All right, now what are you seeing here again? Same scenario here, we broke the structure. All right, now automatically there are buyers offered and there were sellers offered. Okay, market tries to offer fair value here, tries to fall from there, but fair value failed to offer. All right, the market came back up, seek liquidity. In this time now, you can see market filling up this imbalance price point up to 100% of the fair value gap. Are you getting me? So it depends on what you actually call liquidity. It depends on how you actually see it. Because basically, every price point, if you drop it in 15 minutes time frame now, you're actually going to see sufficient liquidity in this whole move here. All right. And now, what can we see here again? Okay, what can we see here again? Clearly here, we can see down that market has actually done what? A break of structure here as well again. So now, since market break structure, all right, so how we going to analyze the market now? Okay, same thing. Does it offer fair value? No, it's not offering fair value. What is it going to do? It's seeking liquidity. And what are you seeing now happening there? Market is continuing its downward movement. All right. Okay, I know what you are saying now is that why does it that most of the time market it is not offering um fair value? Market offers fair value. In some cases it offers fair value, and in some cases it chooses to seek liquidity. It actually depends on how, like, it depends on the volume pushing price at that price point, and depends on the fundamentals as well. All right, let's say okay, let me just cut it short. If not, I keep making the video complicated. All right, so now we see from here. All right, this was a lower low, now this was a lower high. Basically, don't just see it from a lower low and lower high perspective, understand it and take, in fact, like when you're analyzing the chart, always try to tell yourself stories. That's what I always tell my students. Always try to tell yourself stories, yeah, like you try to make sense out of it. All right, try to make sense, like try and do like you are talking. That way, when you are seeing price approaching your level of interest, that is your POIs or whatever you call them. All right, you don't second guess your bias, you don't second guess your trade entries, you don't second guess, because now you actually understand now that, all right, so there were buyers offered, okay, and here there were what sellers offered. And what are you seeing happening here, like to the downside here? Basically here, what's going on here is that this is now the new region to be traded, because market has done what it wants to do here already, whether I like it or not. It has done what it wants to do there. So what's the next thing now? The next thing now is to observe the price action here, because clearly this is the next region that you can trade from. Price could expand lower than this or whatever, but we're working with what we are seeing right now, because this is not a live chart. All right, so now we can see that this particular region now is the only region now that they were issued. Now we should start trading from here, you understand? So now we've seen that the sellers here, and we would have been expecting buyers to come in and retest, all right, and retest the previous lowest price point. Okay, the previous lowest price point, we would have been expecting market to come and retest the previous lowest price point. But now what are you seeing is happening now? We're basically seeing now that, okay, fine, we're not offering what fair value, because the retest is not happening. All right, so what are you now seeing happening here now? Market is basically doing what? Seeking what? Liquidity. All right, so now market has gotten that liquidity. And remember what I said in the beginning of the video: if there is no liquidity, the market is not going to move. All right, so market now seek liquidity, then off we go. All right, so now market has already seek liquidity. Now it's not making sense, because now there's liquidity in the market. So now there is now buyers and sellers. All right, so since there's now buyers and sellers, they've already done what? They've already what? Offered fair value. Okay, they've already what? Offered fair value. Now since they've offered fair value, now what are you now going to expect on the next move? Now where's now your next tradable region now? Okay, your next tradable region now, it is this new expansion that price just did, because now we're going to be expecting same thing to repeat itself. All right, in the sense that right now we are seeing now that they just only sellers offered. Yeah, and now what are we going to be expecting? We're going to be expecting buyers, like we're going to be expecting buyers to come in. All right, based on market has already agreed to transact on this price point. All right, that's from this point 1.237. All right, from 1.237 to 1.234 1.246. Yeah, they've already transacted there already. So what's now your next area of interest for you to now be, because this is how you actually read the chart and maintain extreme accuracy. Yeah, now you're expecting price to actually come and retest the base of the of this previous fair value. Are you getting me? So now we're expecting price to retest the base of this fair value. Remember, if there's no liquidity, price is not going to move. And each price point now, based on what we're seeing now, that market is maintaining lower highs, lower highs, lower highs. How is going to create that lower high is not your business. What you are much more interested in is what the lower prices. All right, you understand the market is creating lower, lower, lower. So you are much more interested in selling. Yeah. So now we see that market is not trying to what? Offer fair value. That's what we're always expecting. If it's not offering fair value, then you switch up narrative. Start looking for points and areas of liquidity that market can seek inside this box. All right, so now let's see what now happens here. Basically exact same thing happened here. We had sellers, we had buyers, and this particular price point now market actually offered fair value. All right, so market offers fair value, it broke below balance now. All right, that broke below this fair value range. All right, we broke. All right, this was now a lower low, this was now a lower high. Now what are we going to be expecting now? If you notice, market tries to offer what? Fair value here. It dumped on the 15 minute time frame. This would have been a move of about, that's on the lower time frame, that's a 20 pips dump. Yeah, it was trying to offer fair value. Pay attention. Market was trying to offer fair value, but then again, there was not sufficient sellers to sell the market at this price point. Then what market is going to do? It's going to seek liquidity. All right, so that's why I see market trying to seek liquidity, even going as far as clearing these highs. All right, now going as far as clearing these highs. All right, so I believe now that you already get the concept of, is market offering fair value or is offering liquidity? Okay, so basically market now came here. alright, to seek liquidity and try to create a lower low. Now market is failing to create a lower low, and now this previous high that market, because remember there needs to be what? There needs to be what? There needs to be buyers and sellers active. There's these sellers now that came in here with this massive impulsive candle to the downside. These sellers would have been able to break this low, but these buyers who were here at 1.2300, they are still sitting tight. All right. So since that buyers are still sitting tight, so what we're now going to see is that that's why I see all these weak rejections, and clearly you can see clearly here now that market has done what? Broken structure again to the upside. So automatically now, what are you now going to be doing? Since you are not seeing this now, is you are going to start your new narrative, because right now we are seeing now that in this particular region we had buyers offered, we had sellers offered, and they agreed to break this into the upside. All right. So automatically this now gives you what? Your fair range. Okay, this now gives you what? Your fair range. That is from here to here. That's we had buyers offered, all right, we have sellers offered. Okay, so now if market breaks, the moment market breaks like this now, so what are we going to be expecting? We're actually expecting two things. Yeah, we're expecting two things. Remember, I like to draw them from the bodies, but anyhow, okay, um this is why you draw them from the bodies, because of extreme accuracy. All right, because most of the times it depends on what you see at the top. That's why, and depends on how you actually draw them. In my upcoming videos, I'll throw more insights on this. All right, and don't forget to subscribe to my YouTube channel and drop a like and share this video if you find value watching it. All right, thank you. So now we had buyers offered, all right, and we have sellers offered. So automatically, yeah, we already have what? Our range already drawn out for us. Okay, we had buyers offered and we have sellers offered, so it's going to look like this, just like so. All right, so now as we have buyers offered and sellers offered, so what are we going to be expecting? It's now either market is what? Offering fair value. Okay, is market offering fair value in this case? Yes, of course. Market came back, retested the top of the previous highest price point of that fair value, and we continue making our way up. All right. Now, what do you see happen here? Market has already broken this structure again now. And what I seen, this is line like higher high, higher low. All right. It's not creating a higher high. In this case, you are seeing now that there is buyers offered and there is sellers offered. All right. That's why they agreed to break that high. All right. So now that's a fair value. Are you getting me? Now, so since it's a fair value now, what do you expect? You're actually expecting same thing to happen again. It's either market comes to offer fair value, or now market starts seeking liquidity. What's that liquidity that I'm talking about? You are seeing all these points, all right? You are seeing all these are lower time frame liquidity region. All right. So in this case, what is happen here? Market didn't offer fair value, market seek liquidity. All right. Market seek liquidity. After market seek this liquidity, this particular one to be precise, when market seek this liquidity, then created this fair value gap to the upside, then up we go. All right, continue going up. Easy game, right? So now basically same thing repeated itself again. Since this was the previous structural high, all right, since this was the previous structural high, all right, that was not higher high, because this was higher low, this was higher high. Okay, this was higher low, this was higher high, and now we can clearly call this a higher low, because this point is strong enough to break this high. All right, so seeing this point is strong enough to break this high, this is a certified higher low. So what are we now going to do? Same thing is going to repeat itself, just like so. All right. Now you ask yourself, is market offering fair value, or it's seeking liquidity? Market tries to offer fair value, fine. All right. But for some reasons, because why I said market offer this fair value here is this: market actually closed above here, traded above, traded below. Pay attention. But market traded above, again, traded below, respecting this high, and traded above, but now it is now breaking this low, trading back down. Now the reason for market to come back down is this: we have this massive level of imbalance. All right, this a lot of orders were missed here, so market basically came back down to fill up all its orders to 100% of its orders before market started rallying to the upside. All right, so I feel this is enough information. Don't forget to subscribe to my YouTube channel, and stay tuned for the next video. And I believe this is actually going to change your view and perspective and approach as to how you view the financial market as a whole. Thanks for watching.